Hey guys, what's going on? It's Riley here with Canadian Dividend Investing, and welcome to episode 93 of my Wealthsimple Trade Challenge, where we try to max out the TFSA in the first 3 years of investing. As you can see, the portfolio is up to $75,343. We are up $4,843 or 6.87% all time. We have $1,500 to play with today, so I'm going to show you guys what stocks I'm buying. Before we jump into that, the $99 you see are coming with dividends that I'm accruing with this portfolio. At the end of the video, I'm going to show you my Blossom account, a link in the description, to show you how much this portfolio is making on a yearly, monthly, and daily basis with dividends. So that's not accounting for the growth of the portfolio. So I'm going to scroll down here, and we're going to be buying two stocks today. Two different stocks that we, one the same, one different than we bought last week. We're going to be starting to dollar cost average more into these US-based dividend stocks because I want some US diversification in my portfolio. This is a great way to get that with lowering the exchange fees. So these are capped Canadian stocks. So basically what that means is you buy them in Canadian dollars. They follow the fund of the American companies. But you just avoid doing those tax exchange rates, which can be fairly high. So first stock we're going to be buying, one that we've been buying a decent amount in the past, has been VFV, and we're going to buy about 7 shares of this into our TFSA. Perfect. So 7 shares of VFV. The second stock we're going to be buying today is one that follows the NASDAQ 100 index. So that's going to be QQC.F. Another one of my favorite stocks. So we're going to be buying about 6 shares of this into the TFSA. This, again, like I mentioned before, allows us to tap into that US market with lowering the fees. Because Wealthsimple has zero fees for trading, especially in Canadian dollars, this allows us to cut into these different companies with lowering our fees as much as possible. What's different about these different companies or ETFs is they have a fairly low MER. MER is management expense ratio. It's basically what you pay the company. So we're paying either Vanguard or Investico to create this fund for us. So scrolling back to the top here, as you guys can see, the portfolio is $75,350. We are very, very close, and I mean very close to maxing out the TFSA. I think by next week, it should be maxed. So stay tuned for the following videos to see what I do after I max my TFSA. I have a couple ideas of what I want to do moving forward, and we'll probably jump into that next week in the video as well. So stay tuned for that, guys. Before I let you guys go, we're going to jump over to the Blossom account and check how the dividends of this portfolio have been accruing. So we'll check back in 2 seconds. Hey guys, welcome back. Here's my Blossom account. If you haven't followed me already, it's at Riley or Canadian Dividend Investing. We're going to scroll down here just so you can see the dividend forecast here. So annually, a portfolio like this is going to make you about $2,188 per year in dividends, which is equivalent to about $182.37 monthly. And on a daily basis, a portfolio like this, we just jumped up to $6 a day. So maybe a little bit more than your average Starbucks coffee every day just in dividends from this portfolio. So again, thank you guys so much for watching. All relevant links in the description. Thank you guys so much for tuning in. Again, like I said, we're about a week away from maxing out the TFSA, so that was our main goal from starting this channel. So very, very exciting time. And don't worry, I'm not going anywhere. I'm going to be starting a new series after that one's completed. So stay tuned for that. Stay tuned for next week's video, and we'll see you then. Enjoy the rest of the day, guys. Talk to you next week.